Hello and welcome to my crypto brief. It's been a red day in the markets, but regardless, I hope you're having a good day. The title of today's episode, is Merry Cryptmas. We're going to be covering the top crypto news stories, followed by some lighthearted Christmas-themed tweets. But before we do that, let's have a look at the Fear and Greed Index. And the CoinMarketCap Fear and Greed Index is sitting at 29. Last month we had extreme fear at 10, but we're just sitting in normal fear now. You probably have heard the saying, buy when others are fearful, sell when others are greedy. If we look at last time we were in extreme fear, we did get a rally after that, but it looks like there was a double bottom, so potentially we could come back down to extreme fear in the next couple of weeks before getting a counter trend rally. Let's move on to our first news article. So from Bloomberg, Bitcoin's silent exodus hits crypto as long-term buyers cash out. And I'll just skip down to here. We have a quote from Chris Newhouse, Director of Research at Ergonia. Not familiar with Ergonia, but let's see what he has to say. So the market is experiencing a slow bleed characterized by steady spot selling into thin bid liquidity, creating a grinding decline that is harder to reverse than leverage-driven capitulation events. And if we read on, for much of the past year, that selling was absorbed by a surge of demand from newly launched exchange-traded funds ETFs and crypto investment firms, but that demand has faded. ETF flows have turned negative, derivative volumes have dropped, and retail participation has thinned. The same supply is now landing on a weaker market with fewer active buyers. And if we look at the chart they've supplied to illustrate this point, the chart being the 2-year plus supply of Bitcoin being reactivated over the past 2 years, we can see that it has indeed grown from November 2023 up until today. And currently we're approaching the heights that this chart reached back in December 2017, which I believe it was when Bitcoin peaked out in the 2017 bull market. If I remember correctly, in January we had the altcoins peaking out. So the altcoins peaked out after this statistic topped. And our current level is also above the April 2021 bull market peak. So we're in the range for this statistic, I believe, to start rolling over. And also after April 2021, when this statistic did peak, we had another altcoin rally a couple of months later as well. So I guess these sellers could be subsiding the same as the buyers have been subsiding too. And our next news story is from Reuters. So Strategy, i.e. MicroStrategy, and Bitcoin buying firms face wider exclusion from stock indices. Let me just read through this small section and then we'll discuss. So Michael Saylor's strategy could soon be dropped from MSCI and potentially other major stock indices, which analysts say could cost the Bitcoin hoarding giant up to $9 billion in demand for its shares, and hurt the wider appeal of the sector. After queries from clients, MSCI in October proposed ditching from its global benchmarks companies whose digital asset holdings represented 50% or more of their total assets. It said they resemble investment funds, which it does not include in its benchmarks. So the interesting thing about this is that the day the queries came in from the MSCI clients, I believe is the day that Bitcoin topped. So we can see how much of an impact this has had on the crypto market, on the Bitcoin price. And the decision's coming up on the 15th of January. So I imagine there'll be some big movements in the crypto market, if not the Bitcoin market, on and around that day. If we look at the poly market, we can see that the chances of MicroStrategy being delisted or strategy being delisted are 66%. So not completely priced in one way or the other yet. Let's move on. So our final news story before we move on to some lighthearted tweets and kind of a nice transitional story, Christmassy story, is the Coinbase story here on the Santa rally. So it says there's a pattern coming up, but the pattern is S&P 500's tendency to chalk out a Santa rally. And it defines a Santa rally as an upswing during the final 5 trading days of December and the first 2 of January. It says here that since 2005, there have been 15 times where we've got the Santa rally and 5 where we haven't. So that's a 75% chance, I guess, that we'll get one. And then it makes the argument here that for Bitcoin, this is bullish because with the ETFs, there's now a tighter link between digital assets and equities. So there you have it. Let's have a look at some lighthearted tweets. So we have Sweep here saying that the markets are down so bad that he's going to have to announce Santa's unexpected passing to the kids. And a nice gift there. Oh no. And finally, a nice Christmas poem for you. So it was the night before Christmas. This is by Matchstick. It was the night before Christmas, and all through the charts, not a candle was green, just red, breaking hearts. The bags were hung by the ledger with care, in hopes that since Satoshi would be there. But alas, no pump came, just dumps and despair. Merry Christmas, Degens. Santa's not real this year. Okay, I hope you enjoyed the video. Catch you on the next one. Bye.